everyone. Welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Abhishek Rastogi, partner at Khethan and Company, advocate Supreme Court and various high courts joining in. Welcome to the show, Abhishek, and a pleasure to speak to you as always. Abhishek, we just had the 45th GST Council meet a couple of days ago. Overall, on a broad basis, what's the view that you held with with the outcomes that did come out? We'll get into specifics later.
I think broadly, it was an agenda-packed meeting. Lot of issues, diverse sector, rate swings, a couple of important ones. But overall, I think there were a couple of issues which industry was expecting. The announcements were not there for some or the other. But yes, I think these physical meetings will now start. And as we know that this 45th GST Council meeting was the physical GST Council meeting held in Lucknow. So from that perspective, I think, yes, even the government wants to meet all states and all representatives from all these states physically. And I think we'll be back to business and flow.
Right. So overall, Abhishek, with regards to individual broad-based agenda as well, what were the key outcomes which were anticipated, which the government has looked upon?
See, I think one of the most talked about and debated one was whether petroleum would be included, whether there will be certain steps to include petroleum. I understand that there are huge revenue implications. It will not be easy for the government to either include or the point, because there will be a lot of hue and cry and noise from industry as well. It will remain a calculative decision. The government may take some time, but what industry was hoping was that if not all the 5 products are included within the GST regime, at least there is some beginning from somewhere. Probably ATF and natural gas could have been included. Maybe not right from the word go, but probably some deadline or some decision was expected for some inclusion of these petroleum and petroleum products, which unfortunately did not happen.
Right. Apart from that, Abhishek, overall, the main decisions remained somewhere towards where the anti-COVID drugs were concerned, the tax on food delivery platforms as well. Let's take the, anti-COVID drugs taxation bit into consideration. How big a move was that according to you?
See, I think it's the populist measure, but a necessary one. I would put it like that. These drugs, we know for certainty that, if these are required and the country faces third wave, we want to keep these drugs as reasonably priced as possible. So I think it's very pragmatic for the government to extend these exemptions for these drugs, so and to say till December, and probably if the government feels that there would be enhanced usage, probably towards the end of the year or towards the next quarter or in the next year, probably there'll be few more extended exemptions to these products, and rightly so. But I think what was missed was with respect to oxygen concentrators, cylinders, regulators. It was hoped that, and it was believed that these decisions with respect to oxygen cylinders, concentrators, and regulators, when these are imported for personal use by individuals, because a lot of times it happened that during the second wave of COVID, these were imported by people. Secondly, a lot of corporates came ahead and gave these as donations to state governments. And the exemption which came after the GST Council meeting, after the 44th GST Council meeting, was only prospective from 31st of May. And by that time, much damage in terms of imports had already happened. So there are 2 states, Haryana and Gujarat, which had given the refund of these taxes by way of reimbursement of taxes. Correct. Now, for sure, today we know for a fact that GST Council is a symbol of cooperative federalism. The federalism is at its peak after implementation of GST, and industry was hoping that if some decisions are taken by GST Council, so that there is parity between states, So why must only two states give exemption to oxygen concentrators, cylinders, and regulators from
Hmm.
the beginning of May, whereas other states are not giving these reimbursements from that point of time when this initial notification came. And there are a couple of writ petitions which I'm arguing in different courts, Bombay High Court, Delhi High Court, and now the matter will also be in Supreme Court. So let's see how it happens. But we were expecting that this change will come because GST Council has been very, very pragmatic when it comes to COVID-related items. Probably
Hmm.
was not missed, or we have no idea why this was not taken up.
Hmm. Hmm. Right. And overall, with regards to petrol goes, there has been an argument. I mean, the FM did come out and say that this was not the right time to bring petrol under the ambit of GST. However, a reduction in the GST on biodiesel, which is applied to all marketing companies for blending with diesel, was announced to 5% from a 12%. What is your view on this? Do you think that's something where GST actually needs to be implemented with regards to petroleum products? Do you think it's the right time, or would you still go with the government to say, yes, it's not the right time yet?
See, I think I'll go with the government. There's no doubt about that because government is in the best position to take a decision on this. But we must be practical here in the sense that at some point of time, this hard call will have to be taken. There will be some swings in revenue. The states will have to also support the federal government and vice versa. I think probably the government wants to wait a little longer because we are not yet out of COVID. But as far as the GST numbers are concerned, we've been crossing 1 lakh crore every month now. So from that perspective, there is more stability of revenue. Now that we have crossed 4 years of GST and probably the compensation formula for loss in case the states get those losses also will have to be looked into, and there are different formulas and thoughts coming around that as well. Probably the government wants to basically see that how much could be these revenue losses or compensation with respect to these losses which need to be given to the government. And probably once this settles, the petroleum products are back into are in the GST purview. But I think the bigger point is that we need to make some start, we need to make some beginning, and probably if not all 5 products, because if we talk about HSD and petrol, MSO, these will have huge implications. But I think if we talk about aviation turbine fuel, if we talk about natural gases, there will have to be some beginning at some point of time. So we will be reaching the milestone of 5 years of GST next year. So probably around that time, if some beginning can happen, I think it will help in achieving the objectives of GST, which could also be with respect to the tax cascading effect, which becomes very relevant for discussion if these inclusions are not happening within the GST regime.
Right. And with regards to where the online food delivery apps are concerned, like Swiggy, Zomato, they will be paying GST as well of 5%. Now, there has been a lot of confusion about it because the question was whether the restaurants will be charging 5% and then you'll have an additional 5% that the apps will be paying. So does this actually mean that if you're going to dine in at a restaurant, or if you're going to take a takeaway at a restaurant, then the 5% will be charged by the restaurant? However, if you're ordering through a Swiggy or a Zomato, then the 5% that the restaurant charges will not be charged, and it will be Zomato and Swiggy that will be charging the 5%. Is that understanding correct?
See, till the time there is no break of the tax chain, there is no problem. When it comes to restaurants and we go to a restaurant, they charge us 5% tax,
Correct.
but not get any input tax credit. So which means that there is a break in the tax chain, and rightly so, because the government reduced the for restaurants from 18% to 5%, because they wanted the ultimate benefit to go to the ultimate final consumers. So there is already a tax chain break which happens at the restaurant level. Now, I think when these e-commerce operators are paying GST, there is no issue, because what the government wants is full compliance to happen. There are no revenue leakages. Those chances of revenue leakages will reduce. But what must not happen is tax cascading. So, for example, if there is a food item of 100 rupees and there is a 5% tax on that 100 rupees, which means that the final amount due from the customer is 105. That 105 must remain 105. And how will that remain 105 is by two ways. Is that 5 rupee credit of the tax charged by the restaurant is fully claimed as credit by the e-commerce operators. If that happens, there is no tax cascading. The only issue which will be is whether the e-commerce operator will charge tax of 105 and 100 in that case. And that is, I think, not a very, very big amount, because it will be 5% on that differential 5 of rupees. So it will be some very small percentage. So to that extent, it is okay. But in case the e-commerce operators do not get the credit of the food item supplied and for which the tax has been charged by the restaurants, then I think there'll be serious tax cascading which will happen. There'll be straight away incremental tax burden which goes on to the consumer. I don't think that's the intention of the government at all, because the government itself had reduced the tax rate for these services from 18% to 5%, with the reason that, today these are sort of populist services or essential services to a very large extent. So that is point number one. So I think when these regulations come, or when these draft rule comes, or when these proposals are actually implemented, the moot point remains is whether there will be tax cascading because of this proposal. That is one. I have a bigger issue with respect to these proposals, and that is with respect to small scale service providers in this case. So for instance, there are a lot of people who would order from cloud kitchens or from dhabas. Now today we speak, they get the basic, they fall within the limit of basic threshold exemption. So if you order food from a dhaba, there'll be no tax at all, because his turnover would not be more than 20 lakhs and they would get the benefit of the threshold exemption. Or there are certain composition schemes under which these people would opt, and hence the tax rate would be much lower. The problem will begin there, because the middle class families or the lower income group families may opt quite often from such places, and they may use these apps to order that. So now what happens is that if you are ordering from your regular dhaba, which would have never charged tax on that food delivery, now because it is routed through the e-commerce operator, there is a mandatory tax which becomes applicable because it is routed through the e-commerce operator. So that aspect needs to be seen, because at any point of time, the proposal must not lead to a consequential effect that the business of these small entities are getting damaged. So it must not happen that the cost is increasing for these small players, and hence people are not encouraged to use these online platforms. I think that must not happen.
Right. And overall with other sectors, say with textiles, with, the shoe industry, they've gone ahead and increased taxes there as well, especially for products which were under 1,000 rupees. Do you think that's something, in a scenario right now, you already have consumption, which is an issue. Do you think that's something which you are burdening again by increasing taxes?
See, I think the answer is twofold there. Clearly, we must move towards rationalization of taxes. 12%, 18%, and 5% are definitely not the good rates. There has to be a rationalization between the 12 and the 18% rate. And I always suggest that a sweet 16% rate is the most appropriate rate for most of the supplies to be taxable. 5% rate is not a decent rate. It could increase by 1%, probably 6%. So there should be some exemptions which are for essential products. There should be a 6% or a 8% rate, and then the 16% rate. 18% is too high, 16% is good, 5% can go up. But certainly 12 and 18% will have to merge for two reasons. One, classification disputes. Secondly, tax leakages and other valuation aspects would go and reduce once you rationalize these rates. So I think that must happen. But answering on to your specific query with respect to the textiles and certain tax rates which have been increased, I think there have been some representations from even the industry, because there were certain sectors which were under the brunt of inverted duty structure. So their inputs and the taxes on the inputs which were much higher and the tax on the output was much lesser. So there was accumulation of credit. So from that perspective, I think few sectors, few suppliers would gain out of it by increasing the rate marginally, but that may or may not be applicable to all of these products. And I think it will be all determined by facts and figures.
Right. And Abhishek, overall, if you go to see in terms of a couple of, amendments and clarifications and recommendations that did come out, what's the sense on that? Because clearly they've come out and said that, with effect from the 1st of July 2017, to provide that interest is to be paid by a taxpayer on ineligible ITC availed and utilized and not on ineligible ITC availed. Apart from that, they've been talking about where removing ambiguity and legal disputes go by giving out a clarification on the scope of intermediary services, as well as they've been talking about, the changes that they've brought in with regards to where the issuance of debit note is concerned and the relevance of the financial year. What do you make of those clarifications?
See, I think as far as debit note issue is concerned, I'll take all of these three. Debit note issue is purely clarificatory because there was confusion after this was amended, whether it is the date of the issuance of the debit note or the date to which the debit note pertains to that invoice. So I think it is purely clarificatory. To my mind, the law was very clear when the amendment came, but still I think from the perspective of providing better certainty, they've come up with this clarification. We welcome that clarification. With respect to the ineligible ITC and the interest applicability, there is already an amendment to section 50. So now what the law says is that if there is the interest which becomes applicable and you already have some amount of credit in your account, the interest becomes applicable only on the liability which you are discharging through the cash ledger. So which means that whatever credit you have in your account, there'll be no interest on that. So once you avail and you need to pay something and you have that balance, you need to pay only on the lesser amount. So which is a very, very welcome amendment which happened after subsequent to some of the petitions which I had filed. I have gone a step ahead to challenge one of the provision of that interest to say till the time we have the amount in the credit ledger, it must not make any difference whether you are paying that amount either after the inquiry or investigation or show cause notice has been issued or prior to that. So that's the question which is pending before the court. With respect to this applicability of the date and from when these provisions become applicable, again, it is clarificatory, but the law and the amendment which have been made are very, very clear. So, but the government wants to provide better certainty, and from that perspective, this announcement or this clarification has come. The third and the most important one, which you touched upon, is the intermediary. And I have been personally very, very vocal. I have been arguing in several courts on intermediaries. Clarification which has come today is very welcome, but there was no requirement of that clarification at all because the law itself was very clear. Of course, there was some executive action because of which the refunds were denied to BPOs, KPOs, LPOs, and a lot of these people who are providing services to the foreign entities. It could be related group entities and so on and so forth. So these entities in India who were exporting these services to the foreign companies were denied benefit because one, either they were part of the same entity or the group and so on and so forth. So that clarification would help the BPO sector only to the extent if they have pending litigation or if they have pending disputes with respect to stuck refunds. So from that perspective, that is useful, but I think, and that could have been settled in any ways because the law was very clear. I think what was more expected, and large number of Indian intermediaries, small and big, were hoping and expecting that the writ petition which was filed in Gujarat High Court, that gets addressed because the Gujarat High Court very categorically said that the Gujarat High Court very categorically said that this petition must be treated as a representation, and the respondents must act with respect to the point and the core point which was in dispute before the High Court. And the core point of dispute with respect to intermediaries is not with respect to the services between the related entities or the BPO related services. Those are some frivolous litigation which has started for some executive action. But I think more important and the core issue with respect to the intermediaries was to test on the constitutionality of the place of provision of these intermediaries. When these Indian intermediaries are rendering services to the recipients located outside of India, can the place of service for these services be treated as in India, and hence they must not get the benefit of exports? And this is what is happening, and that's what has been the arguments, both constitutionality and other grounds, that these Indian intermediaries are at par with other service providers under the definition, under the current regime of GST. We, for the first time, have the definitions of the service provider and the service recipient, which was not there in the erstwhile regime. So I think while the circular clarifies with respect to BPOs, the circular mixes the issue, doesn't go on to the core issue, doesn't the issue with respect to the place of provision of these intermediaries, these agents, brokers, indenting agents, and so on and so forth. And they will continue to struggle with respect to the applicability of these taxes, and the constitutional challenge will continue. So I think from that perspective, a lot of these small and big intermediaries, I have received hundreds and hundreds of messages from small and big players with respect to what is happening here. The first impression came very clearly that it appears that the benefit has come to them because it was a clarification. It looked like the positive clarification, but ultimately that portion on the hardcore issue was missing. But we hope that the GST Council will again look into that, will again look into the specific findings of the Gujarat High Court order in Material Recycling Association of India, wherein the court has requested the GST Council and the respondents to look into that issue and treat that as a representation, and the industry is hoping as well.
Right. And with this, another aspect, Abhishek, is with regards to where the slabs go. As of now, I think we have 5 tax slabs. Plus, if you see on the 28% tax slab, there is a cess of around 12%, which is levied. And that was especially with regards to where the beverage as a category goes on the consumption side. On that is where I think they did come out with a clarification earlier, saying that if there was a juice content, you could go back to 12%. And now they've said that even if there is a juice content of, say, around 5%, you will still be charged 40%. Now, do you think rationalization on items like these is something which is required? Because number one, I don't know why beverages fall under the sin category. I mean, that's something. Plus, secondly, initially you said that, yes, you should be helping your farmers by, procuring as much as fruit as possible to use juice content, and then you will be taxed lower. And now you've again gone back on that even if you're using that juice content, you will be again charged 40%. I mean, what would you make of this?
So I think, frankly, and this is my personal opinion, 28% is not the right rate at all. Whether it is sin goods or other goods and so on and so forth. Of course, on tobacco, etc., that
Correct.
The government could see, but all of these products which you spoke, I think 28% is not the right rate. Even if you see the hotel industry and the room tariff or the luxury goods and so on and so forth, I think 28% is not the right. What happens is that the value of that supply is also high, right?
Correct.
So you would not want to discourage that at a very high rate. I think through your medium, I would want to put that as a recommendation to the GST Council, is that 28% rate must be used only in rarest of rare cases, where we feel that the goods which are being consumed are not for good health or are leading to pollution. Anything and everything which is leading to either ill health or pollution must be taxed at the highest possible rate, because we ultimately need to discourage usage of those supplies. And even for that matter, if the government wants to impose other cesses and all on that too, because at the end of the day, the government also wants to have its revenue based on the expenditure which is planned. And rightly so, there must be a rate, but I think there must be a lot of thinking to just revise this list of 28% rate. I'm not saying whether you trim it down or you increase it, but this has to be used with specific calculations in rarest of rare cases, in cases where the goods are actually sin goods, and in those cases where the consumption or the supply or the usage of either the goods or services is leading to pollution. Because we know for a fact that global warming is the key point which will be discussed at every forum. Our generations ahead will have lot to suffer if we do not take the corrective measures today. So whether when we can give affordable rates to electric vehicles, we must not shy to levy the maximum possible rate possible for those vehicles which are which are not environment friendly. We must not be shy. Then we must not think whether it helps a particular sector or it does not help a particular sector. Anything and everything which leads to increase in pollution at the highest possible rate, so that we discourage the consumption of that. Then last thing should be those items of import which are not essential items but are heavily imported in the country, and we are facing a bad balance of payment and the forex out happens. There the rate must be at the highest possible rate, so that the price elasticity of demand plays in itself, and the price is increasing and the consumption comes down. So I think we must move in that direction from that perspective.
Right. So very lastly, Abhishek, in terms of where rationalization goes, since the time we started off with GST, how far are we from getting into that taxation structure where we can come out and proudly say that, yes, we are in the right direction now, things have settled down in terms of where taxation goes? How far are we yet?
See, India is a very diverse nation. We are proud of it. There is no doubt. Diversity helps us to learn from different cultures. But that raises a lot of fundamental questions, a lot of issues, sensitivities, and so on and so forth. I would give full credit to GST Council. It's not easy. 2017, 2016, I still remember a lot of these discussions with Mr. Jaitley. And that time it was very difficult, to get everybody on the same page. But I think the credit must go to the GST Council. The credit must also go to industry, because believe me or not, there have been so many rate changes. There have been so many amendments. So while GST Council is pragmatically doing it for industry, the industry is also coping quite significantly well, because the rate changes. Your CFO or the tax head does not know about the rate change. He applies the, and then you end up. So I think tracking by these industry experts with respect to compliances, we must be proud that today we have the generation of the tax experts which help the industry. We have bureaucrats which are doing a lot of this thinking, and I think credit must go to us. But yes, of course, if you talk about the rate rationalization, we must move ahead to the simplified rate version. We need to have better understanding of the revenue neutrality. Importantly, today, the government has a lot of data. Artificial intelligence is being used even to track a tax evasion. So, and I think we as a nation must be proud of that, because we are now using technology to reach out to decisions, making out these important decisions, do ABC analysis of goods and services. And I think that must happen. We must do that evaluation, and certainly rate rationalization has to happen, because otherwise there is no point in moving to GST in case we are not meeting the objectives of GST, which were agreed in 2016 and 17, rate rationalization, removal of tax cascading effect, actual cooperative federalism, which we are seeing all across happening. GST Council has not gone into voting system except once or twice. So I think that cooperative federalism is at its peak. So when we have all the groundwork which is done today, I think rate rationalization must happen. Some sectors will not be happy. Some sectors will be happy, but at the end of the day, if the litigation gets reduced, it helps significantly. 816 exempt and the highest slab rate, I think, must be on the cards.
Absolutely. And I think the reason why GST was introduced with regards to our ease of doing business, that's something which actually will fall in play. So true, Abhishek. Thank you so much for speaking to us and sharing your knowledge and your insights with us. Great speaking to you. Thank you once again. Stay safe and we'll speak to you soon again.
Pleasure was all mine. Thank you, Hiran. Thank you so much.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.